Hello everyone and welcome to today's Stocks and Crypto YouTube Charts video. I am NoFOMO Charts. Today is February 1st, 2026, Sunday. It's 11 o'clock p.m. Eastern Standard Time. Welcome everyone. This is a swing trading and investing YouTube Charts channel. The market is very volatile right now, both stocks, ETFs, and crypto. We'll jump into some charts. First, the upcoming earnings for next week. This week, we have earnings coming out from Palantir, Disney, AMD, Google, Eli Lilly, Qualcomm, Amazon is a big one, MicroStrategy, Reddit as well, Iran, as well as other company and names. Very important week. Although last week, tech earnings was mixed, even more important. Economic data coming out, manufacturing PMI, job openings, non-farm employment change, services PMI, unemployment claims, average hourly earnings, unemployment rate, consumer sentiment, inflation expectations, natural gas storage, OPEC meetings as well from last week. Recent news. So after Wednesday's meeting, the USA Federal Reserve held interest rates steady, meaning no change at this time. Tech earnings were mixed, some good, some bad. Inflation data was also mixed. The PPI data was too high, which is bad, which also contributed to the ongoing volatility and news. President Trump on Friday nominated Kevin Warsh as the next Federal Reserve chairman. The market had a volatile reaction to that in the short term. President Trump levied new tariff threats against EU, Canada, Mexico, and South Korea. Some of those were rescinded. Some of those are ongoing negotiations. So a lot of these new tariffs coming from President Trump might be negotiated actually. Nvidia's additional investment into OpenAI has been put on hold. It's paused. SpaceX could potentially merge with XAI, that's Elon Musk, his companies. Google launched an AI interactive world prompt platform, and some video game stocks took a negative hit to their stock price. White House, they are planning to meet again with reps from crypto companies regarding the Clarity Act and laws for crypto. Coinbase launched their prediction markets platform, partnered with Kalshi. Prediction markets from Coinbase. Interesting development. Although the market is basically on fire right now. So let's jump into, we'll do index futures and Bitcoin futures first, because at the time of this video, it's like the middle of the Asia session, a couple hours, the EU session is going to open. And already for S&P 500 E-mini futures, I just call it ES1. We're already having that gap down and a little bit of negative 0.72% or 1% from Friday, gap down. There was a lot of bearish news or bearish interpretation of the news. And on the daily chart, right around 7,018, we had that double top in the market. I'll put a yellow box. Double top in that spot. So now we're falling down to the 50 EMA. We just lost it, 6,900. The next level of support down is 6822, 6776. We could put up a Fibonacci from the tariff low to the tariff, I'm just going to call it tariff high or earnings high. We can see the 236 is not even close to the 100 EMA. It's way down here, 6525. So the EMAs on the futures chart is actually very wide. Check a pivots. So we're under the pivot point. It's kind of harder to see now with all these lines. This is our pivot point in the yellow. So we lost that pivot point to open the week, and now probably 6854 could be the next level of support down if we keep crashing. It's just futures though. Let's go to Nasdaq futures. Nasdaq futures, ever since last Friday, we've been pulling back and gapping down. My interpretation is it's just too much bearish news. Investor expectations are not being met with the earnings, the bearish news coming out of America at least. It's too bearish. And what I see on like Bloomberg European edition or Bloomberg Asia is sell America. That trade is ramping up speed again. It's all about sell America, sell America. So because it's the development, some of the developments happening right now, it's not the best, not the most positive. So again, what happened? We hit this resistance here at 26,000. And we lost the bottom side support of the trend line. We were almost in an ascending triangle, but we fell down. So I'm just going to call it that we're in this type of consolidation. We've been going sideways in the price, sideways for almost 6 months, 4 months. So where's our next level of support down if big institutions and hedge funds are just going to keep selling America or American stocks and ETFs? Well, we can see here that the support on the downside is 25,060 for Nasdaq futures in Q1. The 236 level and the next major level support down is 24,154, 24,000 as well. Open up pivots. We lost that pivot point in the blue circle, heading straight towards S1 pivot point, which is 25,179. So for me, I don't like catching falling knives. Made that mistake plenty of times in my career. So I try not to just catch open falling knives on a daily chart unless it's extreme, extreme, extreme. So for me, when I open a Bollinger Band and a linear regression, it needs to get somewhere down here below 25,000, somewhere in this zone. I'm going to put a flag mark. I'll put an arrow that's bigger to see for next time. Did we hit that zone of the lower S2 or less than 25,000? Because on a daily chart, I'm not going to always see W double bottoms or upside down head and shoulders or uptrend reversal. It's going to happen intraday, like 4 hour, 1 hour, 15 minute. I might see something like that. Sometimes it just needs to get extreme down here, poking outside the Bollinger Band, poking outside linear regression, penetrating through an EMA, and then that's actually some kind of bottom spot. Could also be low stochastic. So right now, futures, we are not low stochastic. I was saying that last week. We are not low stochastic. So we could definitely, I mean, we could crash, bounce, but I'm not really entering my best trades, and it needs to get oversold for me as a technical trader. It might not get oversold on the daily, however. Let's go to Dow Jones Futures, YM. So this one will go a little faster. So Dow Jones, it's in this short-term downtrend. We're approaching the 50 EMA, which we haven't done since November 2025. And it's not quite a head and shoulders. On a weekly and a monthly chart, we can see if I pop up the EMAs, we were kind of way out of bounds up here, way up here at the almost 49,000, almost 50,000 range. Up here was a little too high. If you turn the EMAs off, you could kind of see, kind of gapped up, hit a ceiling spot. Weekly chart, weekly shooting star, that's not good. So this pullback down to this EMA, this is the first test point of the price, 48,584, and if it's real bad, 47,917, that number. Basically, these two EMAs as support. Pivot points on the daily chart should be about like 48.2K or 47K if it's really bad. If I pull up in some indicators, Dow Jones Futures was getting more close to the oversold range, but if I really want momentum, I'm not even seeing the build MACD or the squeeze yet on the daily. Those take much longer to form. It takes about 3, 4, maybe 5 weeks. So in a nutshell, how I'm going to play the indexes is I'm waiting for support levels. I'm trying to be very patient. If we have some kind of surprise news V-shaped recovery like this, I'm just going to let the trade pass because the developments that happened last week were just kind of too bearish for me. Let's go ahead and skip to gold futures. I'm sure people want to look at that. Now here we're going to get into some like FOMO type charts. So if someone's just brand new, it's okay to just skip, pass, wait, or paper trade. The charts I'm showing may evoke an emotional reaction in many people, especially if they have open positions or they got stopped out, unfortunately. I do want to point out that the reason why you don't hear me talk about prediction markets or even options so much is sometimes when something like this happens, extreme volatility, anybody who opened up call options, unfortunately in the past like week or two, probably just lost all of their money in that position. They got liquidated. So it's same thing with prediction markets. For silver futures, the prediction market was saying we're going to end at 120 by the end of the month, but we did hit 120, but then we're not ending at 120 at the end of the month. January 31st was and Friday, January 30, it hit 77, 75. So that prediction market got liquidated as well. That's why you don't hear me pushing that onto people. Sometimes just buying a regular stock or regular ETF that has extended hours eligibility, meaning especially something like SPY, QQQ, DIA, IWM, GLD, SLV, USO, UNG, at least those are extended hour eligible, so somebody could just open up their platform and sell. The stop loss won't work over the weekend or when markets are closed, especially if it's a day or a good till cancel stop loss, but at least somebody can manually open their exchange and get out of their position or manage risk, like sell partial or sell all. Have to put that information in there. So now gold futures. Again, the saying on Wall Street is never try to catch a falling knife like we're watching right now. Only if there's an amazing intraday setup. But if I go intraday, I don't even see double bottoms anywhere. Unfortunately, I don't see double bottoms. I don't see upside down head and shoulders. I don't see trend line breakout, uptrend reversal. The bears are 100% in control right now. We also had a weekly shooting star on gold futures. Daily hit the evening star, flash crash. The only saving grace, the only silver lining is that the 4-hour and the 1-hour oscillators are starting to get oversold. So at some point, and from speaking from experience, I'm not going to try to time this because I need to see something big set up, like A+ setup for me to just play a little bounce. The best thing for me to do is just wait and walk away. Although there could be a Morningstar pattern, right? If this stops at some point around 4,500 or 4,228, maybe around 4,500, and we have a green candle to bounce, we might get a little bit of a bounce, but that's playing the first crash bounce, which is not the greatest setup. The greatest setups are like the first pullback before a rally, right? Rally, first pullback, or second pullback. The crash pullback doesn't always go up because if every institution and hedge fund and trader is shorting gold right now or trying to salvage their position, it actually might not stop as fast as I think. Okay. Silver futures. Silver futures honestly got destroyed. This was, I full disclosure, I had no silver position for the past couple weeks, so I'm glad I never got into there because if I played options, call options, it would have got absolutely destroyed. So sometimes it's prudent to just pass or manage risk, like shrink the position size or stop loss, or just don't even play. Don't play speculation, right? So let's get the technical analyst analysis from the analyst on the charts. Let's go bottom of 2025 to the top of this speculation top. The silver went parabolic. Were there warning signs? Yes, there were. We were way overbought on a weekly chart, almost 90. Double top on the stochastic RSI on this weekly chart. But when Bollinger Band, linear regression was the red flag for me, which is why I said I don't think I want to do this on silver, because if you can see my linear regression, it's these diagonal blue lines down here. So when it's on the top above here, that's the danger zone. That's the bear zone. That's the shorting zone. That's the sell take profit zone. If it's something like silver, because silver usually does not rally that hard. Even the daily was above linear regression. When it hit 120, that's way out of bounds. That is not normal. So we had an extreme reversion way past the mean. We hit probably one of these EMAs. We had a 50. We're right on the 50 daily EMA right now. I would be interested in silver if it gets $71 or $60 or $50. Then that's erasing all of this speculation, and then we could try to get the bounce. So in a nutshell, until I see on gold or silver or even gas or something, some kind of real intraday setup or trend change, because it's a death cross on the hourly, I'm not really going to enter back into this because shorts are in so much control right now. Speaking of oil and natural gas, let's go to those charts. When you look at CL, oil futures, now where can we fall down to in terms of the price? We could come down to 61.52, 60.17, 58, or 57. Still in this uptrend for now. The pivots, we lost the pivot, unfortunately. The next pivot is way down here. So then probably 62 to 61 is going to be that spot. Again, falling knives are very dangerous. Let's go to NG, natural gas futures. This probably might not match everybody's chart because futures actually crashed 45%. My system, natural gas gapped down like negative 16% over this weekend. It might gap down even lower tomorrow. So if we look at this chart, natural gas, it's also way out of balance, right? I'll turn the EMAs off. We could just look at Bollinger Band in the white and linear regression. It's way up here on a Friday. It was down here at the low oversold spot. That's why I love linear regression, because sometimes if the oscillator's down here, even though there was an amazing setup, this is a perfect example of a good setup versus trying to play breakouts, right? Maybe I could play a breakout here, but I don't really want to play breakouts up here. So what was the setup on natural gas, if anyone was wondering, is we were downtrending here, making lower lows, but we were building momentum on the MACD and the squeeze, and we had a double bottom on stochastic RSI and the volumes building. That's called bullish divergence. That's why we had such a violent short squeeze, and it went, futures 100%. I think just a regular UNG natural gas ETF minus the crash went like 50% approximately. You could see the squeeze down here. So that's what I need to just wait for. Instead of chasing breakouts, just wait for my next squeeze. That's going to happen. So on NG futures, natural gas futures, this crash is bringing us back into reversion to the mean zone. Just make it normal again. I would not be surprised if it tries to gap down here in the $2.90 range. Okay, so let's just jump right into Bitcoin futures, and then we'll rotate back into stocks and crypto. I'm being very much more detailed because I don't want to give people wrong information. So that's why I'm going longer on each chart. Bitcoin. We know crypto is downtrending right now. Were there warning signs? Yes, there were. Let's review them. On a monthly chart, Bitcoin USD and Bitcoin futures was showing a double top on the monthly chart from October 2025. That was the mega signal. Also, we're losing momentum in the histogram green. We had a bearish divergence for all of 2025 and the monthly. So there's the investing warning sign. The weekly warning sign was we also had a head and shoulders price pattern up here in this circle. We have another head and shoulders that was building. That's just broke bearish on a weekly right now. We had double top on stochastic, losing momentum on MACD, bearish momentum on RSI, bearish divergence as well on a weekly. Also, for a small moment in time, we did poke out at the very top of Bitcoin at 127,000. That's out of bounds on Bollinger Band. Now on the daily chart, what was the negative signal? We started downtrending. Once we lost the 200 EMA and we had a death cross in December, we had one last chance in December to try to rally back up. But once that failed, I sold all my crypto. I'm out because the strategy, like I said, from last week is on a daily chart. Let me just bring up a simple MA cross technical indicator. It's free by TradingView. To set it up manually very quickly. Open the settings. I'm using a 50 short moving average and a longer 200 moving average. I like yellow for 50, red for 200, and blue for my cross. I thicken the lines up. And we could see the last golden cross. Let me close this. The last golden cross we got was in March 2023 at this spot. 2023 golden cross. So then we had a death cross on December 9, 2025 death cross here. So we can see very simply on this chart using two moving averages, the 200 EMA held, 200 EMA held, 200 EMA held, and then at October 2025, 200 EMA did not hold. Does not hold. No. Usually the fourth or fifth time in my experience of an EMA bounce is the fail spot for swing trading and investing. Then we got rejected by the 100 EMA, basically, or 50 EMA. We almost had an upside down head and shoulders, but sorry, the whales, the miners, the institutions, the hedge funds, people who bought Bitcoin 10, 15 years ago, probably taking their profit. People getting stopped out and liquidated as well, bulls, unfortunately. So for Bitcoin, where can we go from here? Instead of quitting, I'm not quitting, I'm just waiting. I'm charting. I can stop trading, but I should not stop charting, because if I stop charting, then I will never see the next setup that's appearing. We could draw two trend lines as well, especially this top one, to understand we got hardcore rejected by that multiple times. So there's a secret trend line there. So if I connect the bottom trend line and put it here, that touch point, this trend line, put it a little lower, with my Fibonacci, could generally forecast where might we go. If we get rejected down, we might go straight down to $71,000 Bitcoin. If it's lower, 55,000. I would imagine, because we have the support down here, and we also, I call it my X marks the spot, we get double support. Probably that's a buy spot for me, $55,000 Bitcoin as a short-term trade. We might bounce there. So these two spots, like 70,000, I'm going to skip 60,000 and just go straight down to 55,000 because that's a 618. If we pull up volume profile for about 5 years, we can see there is some buying at 63 over here on the right side, 63,000, and then there's like 43,000. There is not much volume over here on this side up here. Makes sense why we could crash down from 120 all the way down to 70,000 with relative, not many buyers coming in there. The only saving grace I can say right now, the only silver lining, the only good news I have on this Bitcoin chart is that perhaps the only strategy that might be working right now, if somebody is a bull long, we have to think about it. I only have 3 choices as a trader for anything, stocks or crypto. I can buy, I can sell. Actually, there's 4 choices. I can buy, sell, I could do nothing, or I could hold a old position, right? And sell meaning like put a stop loss or put a take profit. That's what I mean by sell. Or literally just press the sell button or hit sell the ask, right? Is the only strategy that might work in this environment is maybe an extreme Bollinger Band penetration to the downside. Bitcoin Future is not the best chart to show this because it's crypto. Let's go Bitcoin USD. I did not take this trade, by the way. This was showing the potential from last time of once we lose this, this is our area of support. We had that X amount of imaginary stop loss. I have not bought crypto for weeks now. So we can see here the Bollinger Band is getting violated to the downside very violently. We lost that dead cat bounce rising wedge, continuation to the downside. We can see the linear regression zone way down here at 68,000, 64,000, close enough to those numbers that I was estimating earlier. That's why crypto, sometimes when we crash, just have to wait, right? That's also somewhere right below the 50 and the 618. All right, let's go to Ethereum. Now also Ethereum, once we lose that pattern, it's capitulating right now, but I anticipate because it's Ethereum and from top to bottom, we're already negative 52 to negative 54% down. That keep in mind, if we get a bounce, we could get a very, very small bounce. Like what happened here in November, maybe like a 10, 15%, and then the bears are going to attack one more time. That's what the bears love doing. Attacking down. So I'm imagining just from past experience, even looking here, okay, lower low, lower high, lower low. At some point, maybe even tonight, if the selling stops or there's good news, we have a little morning star, probably bounce up to like 2,600. Then bears are going to try to attack one more time down to 2,000. So once we're under the pivot point, then I just play these support levels, 22, 2,000, and 17, and the all-time low of 1,500. Now, are we in an uptrend? The answer is no. Unfortunately, we are not in an uptrend. This was an uptrend last year. Half of last year. The second half of last year is a textbook downtrend with a fake dead cat bounce that just did not work. We almost had the double bottom, but the Clarity Act got rejected. Too much bearish news. We are downtrending. Everyone's selling. So patience is the key on crypto. As a bull, it's painful and it's boring to just wait for setups. But that's the key. Sometimes doing something else is more productive as an investor. Sometimes, playing sports or go exercise or, eat a nice meal, eat a nice steak or something. Because just staring at the screen, waiting for a setup can take a month, could take a year, could take one day only, overnight. So it really depends on the price actions. XRP, once we lost that support, where are we going now? We're in the death cross. Remember I was warning that all cryptos had a death cross. We had a chance. We had the short squeeze. But again, the Clarity Act got rejected. Downside sell-off. Now, how do we chart something like this? Get a lot of price action, turn off all the indicators. I literally don't need any of them. In this case, I would put a Fibonacci from this November 2024 breakout all the way to our high, which is July 25, the close to close. We're in the 618 zone, so that's interesting. This is kind of that lowest support zone, $1.60 in the past. Pull up a volume profile. There's a lot of trading activity from $2.40 to $2. There's a little spike here at 150. If we lose 150, probably going down to 110. We lose 110, probably going straight down to $1.50. Fortunately, still in that death cross, but I like the fact that let me open the pivots. We're holding support now, if I notice that. So instead of being very bearish, I like that we're holding support S1. So if we hold S1 at $1.50, maybe we could get a little relief bounce up to like $1.75 just for maybe a day or two. And then bears are going to try to crash us again. So there's also this trend line. Until we break this trend line, the top yellow, we're not rallying significantly. We could have like a squeeze, but I'm talking about, are we going to trend change out of here? It's not happening in the present moment. Solana USD, same thing. Open up the daily. Open up the daily chart and low to high. We're also in the 618. So there's some slight good news that we've survived one time when Solana crashed negative 60%. So Solana is doing that again. It's literally negative 50. Literally negative 59% right now. So if we have any special news about crypto, now's the time the bulls need to unload all of their bullish news. Corporations, government, because without it, we might have some serious capitulation over the next 1 or 2 years. So I need to see a trend change. We are literally copy pasting this right now. Is happening right now. We had a high, downtrending, and it's going up and down on the way down. Downtrending, we tried in the past, and then one more down. Usually the despair is sometimes the bottom, but the difference between April 25 is that's the tariff crash, and we had a much larger momentum on the bottom red and yellow, MACD and squeeze. Right now, I'm not seeing that. That's why I'm going to have to wait till about March or April. My theory, my forecast, or my prediction, if you whatever you want to call it, is that we might not get investments into crypto or stocks until after April 2026. In terms of retail getting their tax return refunds, tax returns completed and getting their tax refunds, then maybe they'll inject that liquid cash back into the markets. If we get a rate cut around that same time, that'll be great, because maybe people get like excited. If the inflation data comes down, if earnings and corporate news all kind of calms down, and there's no major extreme tariffs as well, we might actually have a chance at a recovery. It's just monitoring and looking at the market in the middle of a crash, or at the beginning in the middle of a crash, feels terrible. It feels so bad emotionally and mentally. But if I am trying to be a trading robot, sometimes I have to be like that. Why do I say that? Because the algorithms are programmed from 60 to 90% win rate on trading. They have no emotions. They're just programmed logic, computer programming. So what I'm saying is, do I really want to buy up here at the all-time high Solana price of 250 to 263? No, not really. I'm actually more interested buying somewhere down here in this zone. Down here, meaning $100 Solana. That was actually, there's that 60% off. We're also in that 618 zone. Very interesting. 618 zone. So in the past, we've had these 618 bounces. It only happened like 2 times. Happened in January or March 2022. We had a flash rally of 50%. So shorts getting squeezed there. In March 2025, the initial 85% rally, but that was like tariff induced. And like I said before, unless we have like a massive momentum to match these spots, it's not happening yet. So that's why, from experience, I know I need to be very patient. If I just wait for that MACD to appear again, if I just wait as a crypto trader or news, but if I just wait for this MACD to go double or triple and then turn green, and once we hit that support level, there's my next bull setup of 20, 50, 100%. Trying to catch one single candle and as a Bollinger Band strategy is actually very difficult as a discretionary human trader, because I have to catch that at the exact perfect bottom spot, which I believe only really the bots, AI automatic programming could do that perfectly in terms of timing that bid size like perfectly. So it's really not in the perfect zone. It needs to, Solana for me, at least on, if I use this strategy in the linear regression and Bollinger Band, it needs to get to like 75, 80. Then maybe I'll auto buy there. $100 is psychological. So we'll see if it bounces or holds overnight. It could. We're seeing little baby hammer right now. Because if this actually, because we tried to go down on support 5% and then we got rejected at 95. So we can see it's starting to bounce a little bit. If it turns green as a morning star, and maybe this particular trend, I'm just thinking out loud here for myself, put a 5% stop loss, maybe a 10%, we might get that little pop to the upside. All right, let me go down the rest of the cryptos very fast. Do some stocks. Tron, Death Cross pulling back down. It's right at S1. Stochastic flat line. But if we notice, the RSI is not oversold on the daily. Dogecoin is significantly discounted right now, but it's not the most popular coin anymore. Death Cross for a long period of time. Some of these cryptos are getting low purple RSI. Cardano, Dogecoin, Zcash around the 200 EMA. HZen, Death Crossed. Dash around the 200 EMA, but not low RSI. There's probably some intraday momentum there. I'm still watching Dash though. Looks like chicken scratch, but we have the hourly Death Cross, the 4-hour Death Cross, but I am starting to see a little bit of squeeze momentum, so maybe there'll be a little bit of a bounce here on Dash, maybe 10% estimated. Link capitulation. You can see we don't get bounces on the daily chart until we get the MACD and the squeeze going on. So that's why for me, if it's just down here, the only strategies I could play is something like a Bollinger Band or a support bounce or something like that for a lot of cryptos and stocks. So instead of looking at 50 of the same similar looking charts, it's just, in my opinion, and according to technical analysis indicators, is we've been downtrending for a long time. We've been in the death cross since November. So until I see a real setup, like here in April 2025, we made a lower low on the price, almost a double bottom, and then we start to see momentum on these oscillators, I am not buying any crypto. Trying to be a lot more tight disciplined this year. Not buying in terms of buying very large position sizes for myself. I'm not going large all in or large position size unless I see like some kind of A+ setup. I might trade a little bit of these Bollinger Band pokeouts because that's one of my strategies. So if Bitcoin gets down to 70,000, that might be a little bit of auto buy for me. The summary, Ethereum, if it gets to around 2100, I might buy some. XRP, if it gets to $1.40, I might buy some. Solana, I could try now, but I really would like it to get around to like $80. That's a better spot, but 100 is also psychological support as well. All right, so that completes the crypto section. Let's go back to some stocks and then we'll end. So we'll do the big names like what had earnings last week. So Microsoft unfortunately had mixed earnings and then gapped down negative 10%. It actually gapped down, yes, to this lower linear regression zone on Microsoft, but it's been downtrending so hard. That's why when we're downtrending, I need to make this clear for myself. This is actually a very reliable, actually I shouldn't say reliable. This is a very prudent way of thinking about investing with charts. For example, if the price is uptrending and I can catch it early enough or on a dip, then there's that potential greater than 50% chance, up to greater than 0 to 50% plus, that it could continue until we get to some like really high spot like gold. However, if it's in a downtrend, trying to buy anything will result in lots of getting stopped out or losses because it's going down. If it's going down, it's more likely I need to short the rejections down. This is regime change. If it goes sideways, I could also try to play the support levels until it breaks down like it did on a lot of stocks and crypto, like that fourth time. So I need uptrends as a long bias trader to try to get the profit there, right? So if we know that that's the three scenarios that I need to be playing, it's either uptrend, then I go long, I go green. If it's downtrending, I sell and I go short, I go red. If it's going sideways, I could try to do both or nothing. So then apply that directly to a chart. I just forget this is Microsoft, doesn't matter. If I just look at this daily chart, and this is textbook. This is textbook uptrend. This is textbook consolidation sideways. And this is textbook downtrend. So if I'm very conservative as an investor, I do not want to buy here. Unless I have some fundamental intrinsic value data number calculation. Just from technical analysis, I don't want to buy that because I need to be buying uptrends for the greater than 50% chance of making green profit. Also using some indicators. Once I get the golden cross here, that gives me extra confidence that, oh, this is going to be it. Greater than 50% chance to make some profit. And from that spot for Microsoft, the potential was 20%, which is pretty good for Microsoft. We just death crossed on Microsoft. So then I don't want to buy that strategy for now. Apple's slightly different. Mixed earnings. iPhone sales were like the greatest for them. We did have that 200 EMA bounce. There could be this potential upside down, head and shoulders, but still it's in that downtrend, holding that support level. So I need to see the upside down, head and shoulders become real, high, higher, low, higher, high, up to like 275. That's what I need to see. Meta had pretty good earnings. And what I was saying last time, remember, you could kind of see it on the charts from trend. It went from uptrend, to consolidation top, double top, consolidation to downtrend. But then there was this trend change. I would not have said this higher low setup on Meta if it kept crashing. There could have been a double bottom if it pulled back to 578. Maybe there's that double bottom right here. But somebody was anticipating they might have good earnings, and they did. So even though it's death cross, the price pattern was showing there's something else. But this is one of the only ones that had that gap up last week. Look at Tesla next. So Tesla, from a trading standpoint, thank goodness for those announcements and the earnings, because it's actually holding that support line like I was saying. Remember Bitcoin, it held 1, 2, 3, and then the fourth time on Bitcoin failed. So hopefully that's not going to happen on Tesla. Holding above the 416 level there's all this open space. If there's good news, or we have to wait for the next earnings for more profit, but Tesla, there's a lot of changes. For example, the Model S and Model X are being discontinued. We have Optimus robot production increasing, the lithium battery production increasing. We have Cybercab, the semi-truck, and capital expenditures. I think it's something like $20 billion estimated around there. I think the news was. And some factories turning into Optimus robot factories, with the future of self-driving to be automated, like fully automated, not assisted, which I would love that, right? In the future. But we're still in that uptrend. Remember, Tesla, the price structure, are we downtrending right now? There's a small downtrend, but it's inside of a larger uptrend potential. So still good. Still good. Look at Nvidia. Same thing with Nvidia. The interesting thing is, on my scanner, it was actually showing some small baby momentum right at towards the end of January. So it's uptrending, consolidation, and then we're actually trying to uptrend very slowly. Went from low stock to high stock, meaning low stochastic RSI. Nvidia is hanging on right now. See if we can maintain that uptrend. Although at the present moment, it's a little bit high price, so we could pull back down to 185, or I hope it doesn't crash below 180. That would signal a problem. So I'm not going to go over all the earnings. I do want to go over some of the extreme charts like Sandisk, Seagate, Western Digital. These are the storage companies. So all I'm going to say is, remember last week I was saying that Sandisk is having bearish divergence, bearish momentum on a weekly, because the RSI is extreme. It's almost 90, double top. So they didn't crash down negative 50% or 40%, but they had a gap up of 16 something percent, I think it was, or was it 20, 18, 16 first, gapped up 8%, and then gave back almost all the gains at negative 13%. So it gave half the gains back. So just beware of Sandisk, because yes, their earnings were great, but it's not going from negative 15 cents EPS to positive 75%. That was almost 600% increase. Right now, it's still high. We went from 75 cents to $5, which is pretty. That's pretty high too. But the numbers that I saw, these numbers might be incorrect, but the actual numbers I saw was something around like 60 something percent. I think they're one of their earnings increase. So this could be different type of EPS data, but coupling that with the news, that's why we had that sell-off. On a technical side, we're way out here. It's way out of bounds, floating in the middle of nowhere. Because if I use a 50, it did bounce a 50. We had a breakout. So this is the low relative area. This is the high relative price area. We could still go higher in the future, definitely. But from my setups is I'm always looking for squeeze. I'm looking for a momentum and the breakout spot. I tried day trading a little bit. That's okay. In terms of the big swing trading though, I'm showing you the setups that I search for. Is I need to see large MACD momentum, maybe a higher low in the stochastic, maybe a higher low in the price or a breakout, and then I have to buy that. And then when it gets extreme, out into a Bollinger Band linear regression, I have to discipline myself to just sell that. Sometimes human emotion overrides programming logic strategies. Sometimes. So, if you look at Seagate, it's like the same problem. We were at a relative support area. There is a low stochastic, goes boom, 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 up to the resistance, and then Doji candle, and then evening star. That's not good for me. That's bad for bulls. Sell, sell, sell. There. Where could it crash down to, pull back to? Probably one of the resistance spots. Maybe intraday. We're right at the reversion mean of 403. So we could have a small bounce and then crash back down to 379 if the institutions want to do that. Western Digital, very similar earnings. Attempted earnings, but remember it's a little bit mixed for one of these companies and then big pullback. So the lesson of the story is when it goes too high, it happens almost every time with speculation or just really aggressive bid buying. And once retail gets in there, is that once it gets too high, there is what I call the day of reckoning or the speculation crash where it all unwinds. Everybody gets stopped out and sells, and then the shorts and the bears attack as hard as they can. We could keep rallying in the future. It's just where's that dip spot? Where's that higher low spot? Where's the pullback spot? We might be looking at one of them right now. Thank you for watching this video. If you like this video, click subscribe, hit the like button, leave a nice comment. Hope you have a good week, and I'll see you next time.